Hey now, in December of 1983, Richard Dennis sought to prove that successful traders are made, not born. So he placed an ad in the Wall Street Journal asking for people off the street to take his 2-week trading course. From that ad, he selected 14 students that he called Turtles. In January of 1984, Dennis funded these traders between $500,000 and $2 million each from his own funds. What happened next was an 80% compounded rate of return over the next 12 months. For more information, check out the description below. Does this system still work today? Well, I tested it and got mixed results, but I did put together a system based on the original turtle trend following strategy that is successful today. But before I show you this profitable strategy, test it, and tell you how to improve it, I just need you to chomp down on that subscribe button like this little guy is eating breakfast right now. I call this system the modern turtle, and it uses 4 studies. The first indicator is the Donchian channel set to the Fibonacci number of 34 for length and colored in blue. I'm going to remove the basis. This indicator will act as our trigger for entries. If you are not familiar with the Donchian channel, what it does is create a line showing the last low and high for the previous period specified. For example, if the Donchian channel is set to a length of 8, the channel will draw a line above the price at the highest point of the last 8 candles. The same goes for the bottom channel line, but in reverse. The second indicator will be another Donchian channel set to the Fibonacci number of 8 for its length and colored in yellow. Again, I am removing the basis. This indicator will provide our trade exits. The next indicator is the ATR band set to 2 times the ATR and colored in white. Richard Dennis used a similar stop loss method, so this indicator will show us where to place our stop loss level. The fourth and final indicator is the exponential moving average set to the 200 length and colored in orange. This indicator will show us the overall trend direction. Let's go over some examples. This chart is Euro versus the US dollar daily candles. The rules to enter along on the modern turtle system are: first, price must be above the 200 exponential moving average. Second, price must touch the upper Donchian channel in blue. When that happens, the close of the candle is our trigger. We place our stop at 2 times the ATR, which is the white band below the trigger candle. We are going to leave the trade open until the price touches the lower band of the shorter Donchian channel in yellow while in profit. This one hits a profit of 2.96. If you enjoy this content, make sure you hit that like button. We have one more long example. Price closes above the 200 EMA. Price touches the upper Donchian channel in blue. This is our trigger. We open a trade on the close of this candle. This one hits the lower band of the smaller channel, but we are not in profit, so we leave this trade open. And this one hits a profit target of 2.11. And now we flip to shorts. This is what I will test for shorts. First, price must be below the 200 exponential moving average. Price touches the lower Donchian channel in blue. Third, we enter on the close of the candle that touches the large Donchian channel. We are going to leave our trade open until price touches the upper band of the shorter Donchian channel in yellow while in profit. And this one hits 1.36. I'm going to show you one more short example. Price is below the 200 EMA. Price touches the lower band of the large Donchian channel in blue. Our trade is triggered when the candle closes. So here we get a touch of the upper yellow band, but we are not in profit, so we keep this position open. Again, we have another touch at break even, but we still keep it open. And then we finally get a touch of the upper yellow band in profit and close our position for a gain of 0.59. I'm going to give you 2 ideas on how we can make the system better along with a trader's landing score. And now it's time to do what I do. Remember, this is just 100 tests on one instrument. If you are thinking of using the system, please do all the required testing and be sure to let our community know what you discover. Go ahead and click the like while I review this test data and go over a couple of ideas on how to optimize this system. This test was done on the Euro versus the US dollar daily candles. It took about 19 years to find the 100 trades. The winning rate was 51%. Most wins in a row was 6, most losses in a row was 4. We had a fixed stop loss for all losers of 1% per trade, but the biggest winner had a risk to reward ratio of 6.27. Gain on the account would have been 14%. With this equity curve, you start out for years in consolidation period, followed by an impulsive move up, and then you lose another half decade in consolidation. What score would you give this strategy? Let me know in the comments below. I give this system a trader's landing score of 5 because it is profitable and there are plenty of signals for the daily chart, but it doesn't keep you in a strong trend long enough and thus kills your profit potential. More on that next. Remember, the enemy of great is good. I have 2 ideas on how we can improve this system. The first optimization point I would like to examine is using a larger ATR. You can see here that increasing the ATR would get you into this trend and not stop you out so close to the entry. The second idea comes from the fact that when we use Donchian channels, we are not entering at a place of monetary worth. The price has already reached new highs for that short relative period. We can try to replace the Donchian channel with something more dynamic like a SSL channel, which I use to test the system here. This may get us into the trade at a better spot and thus increase our winning ratio, which with a dynamic target can greatly increase our equity. Check out this playlist for more profitable systems and have a great day if you want to.